Hi, everyone. This is Samantha Varner with Prosymmetry. Thank you so much for joining us today. Apologies for running a few minutes late here. We are so excited to have Rita McGrath with us today. Rita McGrath, if you have not looked into her, if you have not heard about her, she is a best-selling author and a consultant to many of the world's leading companies. I have notes here because she is that accomplished. So let me look here. Rita has more than 25 years of experience and is at the cutting edge of strategy when it comes to high uncertainty and complex environments. As we all know, in the resource management world, we are entering into that environment right now. She is an author, a speaker, a consultant, and a professor at Columbia Business School. And she is ranked as one of the top 10 management thinkers in the world. We are so excited to have her here today. And Rita, I will kick it over to you to start our Resource Misalignment webinar.
Hello.
There we go.
Everyone, how are you? So it's a real pleasure to be here, and I'm delighted to be able to share some thoughts about resource allocation with people who are passionate about the topic. My intention is to spend a few minutes just introducing the topic and laying out some ideas, and then we'll have loads of time for questions once the formalities are a little bit behind us. So let's see if I can get this to work. Hopefully you can see this. So Samantha, just guide me. Everybody can see this?
Yes, we can see that.
Perfect. All right. So one of the fascinating things when I look at my decades spent now studying innovation is that it goes wrong more often than it goes right, right? And one of the biggest challenges is I find it's pairing out the resources to really get long-term innovation done. It seems to be one of the most intractable challenges that we face. And I think this is one of the reasons why executives who were studied recently, McKinsey, fairly recent study done in the kind of middle of the pandemic, basically said, of all the places that we might explore growth, this new growth area is one of the most challenging and one of the ones that we're least prepared for people to undertake. And so you think about, well, what are some of the most significant barriers to innovation? What gets in the way of allowing people to really move forward when we know that in the long run, we know we need to innovate, we know we need to grow. As a friend of mine says, today's business pays your salary, but it's tomorrow's growth businesses that pay your pension. I thought that was a great way of thinking about it. And when you look at the most significant barriers, you get this common list, right? So it's not good for my career, the existing business is too powerful, we're not really focused on our customers, we're afraid of failure, we don't like unpredictable results, and the list just goes on and on and on. And so I think it's an interesting thought question to consider, well, what do all these things have in common? And what I would argue is every single one of these things is self-imposed. And it's self-imposed because we are building businesses, we serve businesses that keep the existing business running and healthy. And a way of kind of thinking about this is, right, here's your existing business. It's like this huge elephant. It dominates everything. It dominates the day-to-day. And especially now, as we're looking at a potential downturn, as people are thinking about continuing supply chain disruptions, continuing disruptions in the way that things are done, the pressure of the existing business is overwhelming. I have this right now with the client. They've committed to their board and their shareholders that they're going to grow 4 to 8%, in the coming couple of years. They've contracted with us to do a growth program. We did like the first month of it, and now all of a sudden they're up to their uxters in, how do I deliver this quarter, and what's happening to pricing there, and what's happening overseas, and the innovation stuff is just kind of getting pushed back and pushed back and pushed back. And so I think it's a real issue for our time, because we know that the companies that will succeed in the long run are the ones that are able to demonstrate that they have a growth trajectory and that they can execute against that. So if you think about the levers that you have to drive growth, right? So if you think about it, what's your growth gap? What's the the gap in your revenues or your profits that growth is going to need to fill. And if you think about it, your current business portfolio is what it is, right? It's either going to grow or it's going to decline. But there's also all these other new things that you need to be thinking about: business model innovation, geographic expansion, services and solutions, maybe whole new initiatives. And the question really is, where do those fit in your resource allocation process? Where do those fit in your allocation of time and talent? And really, what is the future of your corporate portfolio going to look like? Strategist Dick Rumelt recently wrote a great book called The Crux. And he says, if you want to be rewarded by the markets for doing something new, right, you're going to have to surprise them a little bit. You're going to have to do things that they weren't necessarily already anticipating. And so this is where the interesting question of option value comes in. And so if you think about it, if you imagine a range of uncertainties that your business could be on, and of course we're all, whether we like it or not, being thrust into much higher uncertainty situations than perhaps historically we'd wanted to be. But in a very certain situation, let's imagine a world with no uncertainty. You're selling college textbooks, or you're selling something that's very replicable, very repeatable. It happens the same way over and over and over again, very, very consistent, similar kind of thing. In that kind of world, a lot of our management metrics, return on net assets, internal rates of return, return on investment, those kinds of metrics sort of make sense, right? Because you can predict kind of what your revenues are going to be, and then you can predict what your return is going to be, and so forth. As uncertainty increases, however, the kind of value you're creating has to do with what I call option value, where option value represents the right, but not the obligation to make some future choice. And what's fascinating to me is, in human life, option value is a construct we pay attention to all the time, right? You send your children to college, you attend a conference, you take a course. I mean, you don't get out a slide rule and say, let me understand what the discounted cash flow, is of the number of people I might meet in this course and how many network connections I would make. I mean, no, most people don't do that. We do those things because we know if we don't make those investments, for example, in my case, my youngest, a major in modern European history, like we could even do all of European history, not just modern European history, with a minor in French. Like, what is that going to lead to? Do you know? I don't know. But why are we happy to invest? We're happy to invest because we know that absent that option, that there will be many choices that are not available to us. And it's the same thing in investing in corporate growth programs. If you don't make investments in options, you know that there are choices that are simply not going to be available to you. And yet, options by definition are uncertain. They're very failure prone. Most of the time they won't work out. So there's small investments that you make today that buys you the right, but not the obligation to make a bigger investment down the road. And so it's a very intuitive concept, and yet we struggle with it like crazy when we get into business. So a way to think about it is, let's say you had an opportunity that was huge, $10 million opportunity. Would you be willing to spend $250,000 to figure out if it's a thing or not, right? And the logical answer is, of course, you'd be willing to do that. If you were a venture investor, if you were a venture capitalist, any of those things, of course, you'd be willing to do that. And yet somehow when it comes to decision-making in the core business, we forget. So this then leads me to how to think about corporate portfolios, where different kinds of projects have a different job to do for you. So if you think about ranges of uncertainty across the horizontal here, I've got uncertainty about markets. So this is, how am I going to get to market? Who my customer is? What price will they charge? Do I have a complete ecosystem to actually deliver the value that I'd like to deliver? Along the vertical dimension, we have uncertainty about technology and capabilities. So is the technology ready yet? It takes a very long time sometimes for technologies to be at a state where we can actually do something with them. Even though they've been brewing forever. I mean, if you think about it, right, We had the Jetsons, the cartoon The Jetsons, featuring, you know, autonomous vehicles and robot servants and instant dinners that everybody could cook, you know, instantly. We've had the Jetsons since 1962, and we are still dinking around with autonomous vehicles. So it can take a really long time for the technology to mature enough that you could develop something with it. So we've got uncertainty about technologies and capabilities on the vertical. We've got uncertainty about markets on the horizontal, and the different kinds of projects that fall into this space do different things for us. So if we think about low uncertainty on both dimensions, well, that's typically your core business. And in your core business, you have two essential choices to pursue. The first choice is, how do I keep my existing core business healthy? How do I make it better? And innovation in this area is absolutely key. So taking your whole tech infrastructure and moving it to the cloud, you know, building different ways of working so that people can connect and communicate, looking at your ecosystem and keeping that vital. Those are all really important ways of keeping today's core business fresh. The other thing, of course, you have to ask about the core is, are there projects, are there businesses, are there elements that have run their course? You know, they've had their day in the sunshine. They're now no longer going to contribute to growth, and maybe we need to consider healthy disengagement. Maybe we need to pull back from those businesses a bit. So that's your core business, and you can be very innovative in the core. Please don't misunderstand me and think you can't, but you know who you're doing it for, and you kind of know how to do it. So it doesn't have that, you know, wrenching level of uncertainty that some of these other spaces in the portfolio do. Moving out a level of uncertainty, so uncertainty is rising as you go up and to the right, we've got what I call new platforms. And a new platform is a candidate to be part of your next generation core. And when you have low uncertainty about the market, so you think you've got a market, but you really want to create a new platform to grow that market, that would be something like Adobe. After its 2008 kind of really suffering in the hands of the Great Recession, when people simply weren't renewing their purchased software subscriptions anymore the way that they had been. And Adobe made the very courageous decision to completely re-platform their business. They said, we're going to go all in on the cloud. We're going to go all in on subscriptions. So they shifted their business model from a shrink-wrapped box kind of software sale where you bought the thing and you installed it on your computer and you owned it forever, to a subscription-based ongoing software as a service kind of solution. Very bold move, very courageous, very successful at the end of the day. And among the things they did to make that successful were they took great pains to explain it to the investing community. They took enormous care about making sure people understood what they were doing. And you know, here they are at the other end. They're a massive player in the cloud, and it's actually fueled major growth because the shrink-wrapped version could only appeal to a certain segment of buyers. Now that they're in the cloud and they got this flexible software as a service solution, you know, you can be an Adobe customer for $7.99 a month, you know, and all the way up to the fully featured packages. So that's an example of what I call a move into new platforms in a positioning sense. You're taking on new technologies. Slightly different situation is where you've built something, so you know you can do something. What you're trying to do now is figure out which markets you might appeal to for that thing. And a great example of that would be Amazon Web Services. You know, they built this flexible, extensible web set of activities for themselves. Basically, they needed it for themselves. And then they had this idea that said, wait a minute, if we could use this, maybe other companies could use this. And if you go back in time, you may remember Amazon was considered to be a retailer at the time. This decision to go into basically enterprise level software provisions, you know, being a cloud provider for the enterprise, I mean, that was a radical step away. But they went for it, and it was able to actually open up a whole new vector for growth. And today, Amazon Web Services, as we know, certainly contributes more profit than a lot of the existing retail businesses, and it has been a huge vector for Amazon's growth. So those are new platforms. Now, a couple of things about platforms to remember is they require commitment. You know, if I'm going to be a prospective customer of Amazon Web Services, they can't tell me, oh, maybe we'll be here in a year and a half, and maybe we won't. We're just experimenting. No, like, platforms require a commitment. Platforms often require a pretty extensive resource commitment as well. You can't do too many of them at once because they're big, right? They're material, they're substantive, they're going to be part of what your company's future really is. So that's the core, and that's new platforms. And in these areas, the traditional tools of business tend to work, pretty well once you got that clarified in your mind. Now, when you get to the outer ring here, now you're in the world of what I call options. And remember, options are small investments we're making today that buy us the right, but not the obligation to continue. So the first kind of option I like to think about is what I call positioning options. And this is a case where I'm pretty sure there's going to be some kind of demand. What I don't know is, which solution, like what technology, what solution. So if you think about what we're doing right here, right? This happens to be GoToMeeting, right? It could be Zoom, it could be one of the Cisco products, it could be WebEx, it could be any number of things. What comes next in this video conferencing, telecommunications, communication across distance world? And we don't know. I don't know. You don't know. Nobody knows. Is it going to be holography? Is it going to be flexible screens? Is it going to be the metaverse? We're all running around with crazy headsets on. Is it going to be what XR systems? I don't know. You don't know. But if you're a company that has a vested interest in participating in that future, you better have some options. And options might be equity participation in a startup. It might be gathering together university research. It might be helping your product people kind of tinker around. It could be any number of different things. But the concept here is they're small investments until you've validated the hypotheses you need to validate about what would actually work in the market. So they're small investments that keep your options open. A couple of other interesting things about positioning options is you may have 6 or 8 or 10 of them that are mutually exclusive. So I might have one bet on holography and another bet on flexible screens. Depending on which one wins, the other one can't win. And in your normal business, so in a platform business or in your core business, you wouldn't want that, right? You'd want to pick a horse and run with it. With options, instead, what you're creating value for is having the ability to keep your options open. That's a very different kind of thing. So positioning options. I think I've got a demand. I think there's a user market out there. What I just don't know is what solution is going to work. Now that's quite a different situation than what I call scouting options. And scouting options represents a case where I've built something. I kind of know it works. I know how to do it. What I'm trying to figure out is what is the market? What do I need to do to actually connect with a customer, to meet a customer where they are, to get their jobs to be done, as it were, done in their lives, which is a concept that comes from Clayton Christensen and Tony Ulwick. And it says, don't think so much about customers buying a product or service from you. Think more about them hiring you to get jobs done in their lives, right? And so a great case that illustrates this is a startup called Varo Bank. Well, they're a little old now. I guess they're 4 or 5 years old now. Varo Bank, started by a refugee from American Express. What his mission is, right, is to help income secure but cash flow challenged millennials to have a better life, right? So these are young people with jobs, so they've got money coming in the door, but they haven't yet built up much wealth. So it's one wedding, one car repair, one something away from a financial crisis. And the way that traditional banks recommend you resolve this is you put your debt on high interest credit cards. And Colin Walsh, who's the founder of Varo Bank, said we don't want to do that. What we want to do is a different kind of bank. So it's completely branchless. So there's no, you don't walk into a branch and talk to a human being. It's mediated, right, by a chatbot named Val, and you do the whole thing on your phone. So it's all very flexible and so forth. Well, pretty early in the design process, we asked the question, well, what sort of personality should this chatbot have? If you think about chatbots, they have to have some kind of personality. And the design team very quickly broke into 2 camps. One camp was like, oh, the chatbot should be like super friendly, right? Like, hey, dude, tough weekend. Don't worry, got your back. Here's my recommendation, emoji, thumbs up, that could be very casual, right? That should be the interface. The other camp in the design team said, no, absolutely not. This is your money. This is your financial security. You can't put that at risk. You need to be very formal, right? You need to be very much explaining, Mr. Robertson, I see based on our AI projected analysis that we're going to run into a cash flow issue. Here's my recommended course of action. Please click the green light to agree, very formal, right? Now, in most companies, how does a dilemma like that get resolved? We have heated arguments. We have rooms full of people with opinions. And very often the opinion that carries the most weight is the highest paid person in the room. And that they just make the decision and off we go. No facts. So if you only take one thing away from this webinar, right? Think about the hours you have doubtless spent in your lives arguing about stuff without any data, without any facts. So how do we create some facts? Well, in this particular case, we decided to do an experiment. We got two interns. One played the role of Mr. Robertson. The other one played the hey dude guy. We had some designers mock up fake input screens. The human beings actually behaved as though they were the chatbot. And we lured representatives of our target market into the conference room with promises of free pizza. And we let them play with the different interfaces. And it turns out when it's my money and my security, they hated the hey dude guy. They really disliked him because they wanted to feel they were in competent, mature adult hands, right? And it was a revelation. Now, yes, we spent a little bit of money. Maybe we spent, I don't know, $500, $1,000. But to test the whole user interface for that entire system, had we gone to market with the Hey Dude thing, for example, and discovered later on that that wasn't the right solution, that could have been vastly more expensive. So the idea here is, don't just argue about nonsense, right? Don't argue fact-free. Go out and do some experiments, do some scouting. And that's really what a scouting option is all about. It's a carefully designed experiment that's going to teach you something. Now, the last part of this scenario here is what I call stepping stones. And a stepping stone is an interesting problem, right? Because I don't know how to do it. I don't know if anybody wants it, but I think the long run opportunity is irresistible. And so a classic sector that this is playing out in right now is in autonomous vehicles. And, back to my comment, the Jetsons, 1962, we've known this is like a theoretical possibility for a really long time. And yet it's taking forever for the technology to catch up. The sort of recent flurry about autonomous vehicles got going in about 2004 when DARPA, the Defense Research Agency, announced a couple of these prize challenges. The first year out, nobody won it. None of the cars could finish. Second year out, I think a Stanford team won it. And that got people's imagination going. Now, DARPA's interested in this because they want to use it for military purposes. But a whole bunch of civilian car companies jumped in. You had, everybody, Ford, VW, all the big car majors investing, by some standards, $100 million in this sector, right? This idea of autonomous vehicles. We saw it as part of the business plan behind like Uber. Uber's like, yeah, we're not making any money, but once we have autonomous vehicles, we'll get rid of the drivers and then we'll make money like crazy. Well, like, who believes this stuff? But let's say you do believe there's something there in autonomous vehicles that merits your investment and attention. The way to go about this is via what I call a stepping stone approach, which is you find a market, typically a niche market, that can use your technology in whatever state it is to actually solve a real problem that they're facing at the moment. And that's where you begin your market build up. That's where you start. So in the case of autonomous vehicles, there's some great examples. One is the military. And in the military, they have to supply frontline troops, with food and ammunition and stuff like that. And typically, in the past, it would be two drivers in a truck, in a vehicle, or a vehicle supply truck. And if you think about it, if you have like 7 vehicles that need to go, that's 14 people that are in harm's way, that are not doing more useful work, that are kind of just doing nothing more but driving a truck around. Now, the robots aren't smart enough to take over that whole job, not yet. But they are smart enough to follow the leader. So what they've got now in the military, and this is in market, is you have a lead vehicle, which is manned by human beings to do what only human beings can do, check out the environment and make sure split-second decisions are made and so forth. And then you got up to 6 vehicles that can daisy chain along behind. So you're taking the drivers out of those vehicles. perfect example of a stepping stone because it's a small market. They have a real problem that they've identified, and you can solve that problem with technology in its current state. So that's what I call a stepping stone. And so a couple of things about the shape of this portfolio. So the first thing is, by the time something has become your core business, right, chances are you've decoded it, everybody else has decoded it, your profits are reverting to whatever the mean profits are for that category. In other words, it's becoming commoditized. To find higher returns, you have to go elsewhere in the portfolio. You have to go up and to the right, in terms of uncertainty. So that's the first principle, which is the potential for these things is much higher, even though the uncertainty is much greater. And this is one of the eternal frustrations, right, of resource allocation, which is, the really, really, really attractive opportunities are also the most uncertain. So how do we break through that? So that's one observation. Second observation I would make is that very often we have not asked the question, does the portfolio we have the potential to deliver to that growth gap I was talking about when we first got started, right? Is it going to lead us to new business models? Is it going to lead us to fruitful acquisitions? Is it going to lead us to new markets? And very often we never ask that question. So let's show what this looks like in real life. Here's a case. I was working with a medical device manufacturer. They make super glamorous stuff like incontinence treatments and hernia healing kits and, elastomer bags and stuff like that. And as the CEO said when I went to meet him, I sort of turn up at his doorstep and he puts his arm around my shoulder and says, "Darling, if you live long enough, you're going to need our stuff." I mean, just ugh. But anyway, so his strategy, right? His strategy is all about customer responsiveness and speed to market. That's what he says is going to set his company apart. Now, if you think about it, what does a strategy like that imply in terms of your resource allocation priorities, right? Well, it would imply to me a mountain of stuff in that kind of core area. Yes, probably a couple of platforms to make sure you're not missing the boat on something really important, and a few options, right? Just to kind of make sure that you're aware of what's going on. But the heavy, intense investment that you would want, given a strategy of customer responsiveness and speed to market in a well-known market segment, would be that sort of core emphasis. And so we went and did an analysis of what was actually going on in his actual company. And this is what we found. So each of these dots, each of these bubbles is a project. The numbers inside the project are the person months required for bringing it to market as reported by the product development team. The projects that don't have any numbers inside are projects that were on the project plan, but nobody's actually working on them. And you can see the spread based on a set of questions that I'd be happy to share with you. They're based on 43 questions that we use to allocate projects to a given level of uncertainty. And what do you see, right? Massive amounts of stuff in this new platform area, right? And you've heard me say already, you can't do too many of these. They require big commitments. They're very resource intensive, as you'll see from the numbers inside some of those bubbles. They're pretty scary. And so I showed this to him and he said, "Oh my God, like this is not a portfolio that is going to deliver the strategy that I say I want." And this is fairly typical, right? You pick up the lid on a typical corporate portfolio and it is a disaster. There's somebody's CEO pet bunny project from 3 years ago that nobody said, why are we still doing this? There's mission critical, absolutely vital projects that nobody's actually working on. The spread of the portfolio has no way of delivering to your strategic goals. And we see it all the time. In fact, it's more the norm than not. So one of the things that I think is super important as you're thinking about resource allocation, as you're thinking about how you even get a view of what's in there, right? How critical that is to be able to line up these 4 processes. So the first process is your strategy process. Now, when it's done right, strategy has identified what the critical challenges are that you need to meet. It's pulling you into the future, right? It's saying, these are the things we're going to elect to do. This is where our future lives. This is going to be amazing, right? That's what strategy does when it's done right. Then you have your budget process. If you think about it, strategy is pulling you into the future, but where does budgeting start, right? In a typical company, where does last year's budget start? the year before. Where does this year's budget start? Last year's budget. So budgeting tends to anchor you in whatever served you well in the past. So you got to disconnect right there between strategy and budgets. Then you have this problem that strategy and budgets is one kind of area, but you also have the whole project governance process. And often that's carried out by a whole different group of people. It's not the people involved in strategy. It's not the people involved in budgeting. It's people operating with a different view, a different allocation mindset. And then, of course, you have the challenge of what do people feel that they're going to invest personally and it's going to get them ahead. And unfortunately, unless you have these things lined up, unless you have some transparent way of seeing where your resources are going, what's being invested in, what's not, you tend to end up with portfolios that look much more like this, where, you know, it's just a mess. It's kind of higgledy-piggledy, throw a dart at the thing and see what happens. It's not being managed. So one of the arguments I would make is if you have a way of bringing these things into alignment. So the first question is, what shape of portfolio does my strategy require? Like a typical allocation would be 70% to the core, maybe 20% to new platforms, maybe 10% to options, but you may have a different allocation that your strategy suggests you need. Now, once you've done that, once you've figured out how much of what you need, then do we have a process of saying, okay, how are we funding these things, right? So how do we bring the budgets underneath the projects that we've elected to pursue? As we think about project governance, right, what's your governance model? And do you have a way of connecting that governance model to your strategy, to your budgets? And then finally, have you really thought through what the incentives are for people? Is it, you know, lip service that you actually want growth and innovation, or is it just, you know, not really what people do to get ahead? People are very smart. They will figure out, you know, if innovation is something that gets us ahead, we'll do that. If innovation is something that, you know, it might fail, you'll be punished, we won't do it, right? So you really need to get these four things lined up in your organization, because what you want, right, is a balance. You want a balance where the new things have a chance relative to the weight and the power of the old things. So Samantha, I'm nearly done, so we can begin to queue up some questions if there are questions that people would like to ask. So let me close by just saying thank you very much. If you're interested in learning more, you know, about these materials, I do a weekly newsletter that comes out, and you can get it on LinkedIn or Substack or my own web or Medium, you know, depending on wherever you want them. We publish them weekly. I also do a monthly wrap-up. On my website is an archive for free. It goes back for a long, long time. And then I've also started another company called Belize, which is all about creating innovation capabilities in a very deep way. And Prosymmetry and I are partnering on how do we help you use tools to make these things happen much more effectively. Okay, so that is the formal part of the presentation, and I think we're ready now for some questions.
Yeah, awesome. So we have a few here, and these are great questions. So Peter had asked, he is curious if there are any insights related to investment level strategy across a portfolio of options.
Can you say more what you mean by that? I'm not quite sure I'm clear.
All right, let me read the question again. We may need some more information. So Peter is curious if there are any insights related to investment level strategy across a portfolio of options. So maybe if we think about this more of like a project, project portfolio management side of the house, are there any correlation between, you know, the investment of time, of people, of money, and portfolio outcomes? Let's just make the assumption that that's what that question means.
Yeah, that absolutely there is. So what you want to know is that your highest return areas, right, are the ones that are the most uncertain. So you want to, it's almost like in your individual investment portfolio, you're willing to, you know, there's money you're willing to risk for a higher return. Now, you're not going to risk your retirement, you're not going to risk your home, you're not going to risk your college fund, but it's money that you can afford to invest in experimentation. So, you know, Kodak gets much maligned these days, and wrongly in many ways, I think. But one of the things that Kodak did as a company from the very inception was they had what they called the Eastman nickel. And so this was Eastman who founded Eastman Kodak, George Eastman, and he made the commitment from the very, very beginning of the company that for every dollar in revenue the company took in, he would put a nickel, 5 cents into R&D, and that was going to fund the future of the company. And that was a very similar philosophy to what I'm recommending now, which is you've got to be willing to put resources against increasing waves of uncertainty. And yes, that's absolutely the philosophy there. And by the way, you're going to expect to lose a fair amount of that. Like, don't go into it thinking it's a no-fail proposition. But most of the time, these things aren't going to work out. We know innovation is a long odds, a long odds proposition, right? And so what we want is to increase the chances that somewhere in the portfolio of stuff we're investing in, we're going to hit one of those winners.
Yep, that makes sense. That makes sense. So one of the things too that was asked as well, we often see, so Prosymmetry, that is us, our software Tempest Resource is a resource management software. And one of the questions here, we often see where a lot of these organizations don't necessarily know where to start when it comes to what are those core activities that have to get done. You had mentioned, a lot of these projects that are currently taking up those resources, those person months are, a wild idea over here or a good idea over here. And it ends up being just a lot of time spent on projects that may not drive that innovation. So if we're talking about organizations that are on that path, how can they start to write that path and get more to that innovation, to that growth, to that more strategic approach to their portfolio?
Well, I think it really does start with identifying your growth, either your growth gap or your growth aspiration, right? So in a period of time, say 3 years, what do you want to look like? And how much of that is going to be what we have right now today? How much of that is just taking it into the future? How much is going to be new in some way? How much is going to be coming through, inorganic acquisition? How much through organic development? So you have to get some clarity around, I call it the business frame. Like, how do you frame what that business is? And then dropping down to the level of individual businesses, right? What's their role in each of those? So if you've got a business that's largely, let's say it's a cash cow, right? Is their role to do that? Or is their role to actually try to be a growth engine in and of themselves? And so what you can start to do is take the kind of corporate level growth roadmap, and back that into what has to be true at the level of each individual business. And so I would often start there. Now, before you even get to that, you may just want to do an analysis of your as-is portfolio. And I know Prosymmetry has some tools. We have some tools at Belize that allow you to do that very quickly. So creating one of those portfolio maps very quickly is something that our software can do. And then what Prosymmetry software can do, as I understand it, is really figure out what the inputs and outputs are to actually make that a reality. So I see those two things working very well together. So, what have we got, right? Most companies can't even answer that, right? You say, well, what's the progress of our portfolio? And some poor intern is working 24/7 for a week to go to every individual person who has the spreadsheet or who has the PowerPoint or who knows, it's just a very inefficient way of doing it.
Yeah. That's a very, very good point. We often find that that a lot of these organizations, they have that portfolio plan, they know where they need to be going, but it's just that it takes a week to pull some of this information together. And going off on what Tempest does, being able to identify not only those resource gaps, but also just the status. Are we working towards this project? Are we working towards this piece that's going to help us grow? Being able to have that insight, it's just, to be able to have that is going to put you leaps and bounds ahead of the competition.
Yeah,
so another question.
While your intern's running around asking everybody with the spreadsheet, what's the status, right? If you had that information already, you could actually make progress.
Yeah, definitely. Being able to make decisions quickly. It's like a power. It's a superpower that not a lot of organizations have, and they should. That's for sure.
Mm-hmm.
So another question that we were asked is, what are the key success factors for a well-performing growth office?
A well-performing growth office.
Yes.
Well, couple of things. I think the first thing is it has to have real power. And that's one of the undiscussable things in a lot of organizations. But if you think about it, if you're the head of innovation or you're the head of whatever, I belong to a number of these innovation-related, conference groups or interest groups, and they all get together and whine into their beer about, I don't have any power, I get no respect. And in a growth-oriented organization where it's taken seriously, there's power, and that can be distributed. It doesn't have to be centralized. So if you take something like Amazon, they operate in a very distributed way. They're considered to have what they call the organizational yes, which means they don't say no, right? You can almost get resources to do just about anything at that company at a small scale, right? Now,
Yeah.
it gets more challenging as you get more substantive, but they believe that saying yes more and more and more is actually better than saying no. So does it have power is the first question. Secondly, is there a robust governance process around your decisions to allocate resources to projects? And in an ideal world, you have a governance body that has power. So they're business heads or equivalent. They're people with actual decision capabilities. They have a set of criteria that they use to make judgments as to where projects go in their voyage through the portfolio. They have the right to stop them. They have the right to accelerate them. And what's fascinating is this governance system, when it's done right. So let's say a project is now ready to go to market. You're bringing it to launch in some substantial way. It's still uncertain, right? And so one of the biggest barriers is the existing business unit head, let's say, who's receiving this thing, is likely to be not very enthusiastic about it. Now, why is that? It's risky, it might require a little bit of investment. It might distract the sales force. It might take, people away from their day-to-day. And so as an existing business unit leader, your preferred course of action is typically to wish that thing was dead and let it go away and let it wither on the vine. But instead, what we do in a governance process that we would set up is we'd say, wait a minute, all the upside of this venture comes to you as the business unit leader. All the downside, let's say it doesn't work out or it doesn't go as planned, whatever, all that downside risk goes to the growth board or the innovation governance board. So you need that alignment of incentives, right? And so now from a business unit head point of view, there's no downside, there's no risk, right? I get my compensation on the business I had. The new business is not yet an issue for me. Now, let's say the new business is very successful. I get my numbers, and then my job is to return some of that money to the growth board, right? Just the way, same way a venture capital investor would. You return that money to the growth board, and then they use that to generate the next generation of new opportunities. So it becomes a really positive, virtuous cycle. And you can do it repeatedly, and the whole organization now learns, and you really move up the innovation maturity scale, and everybody knows what to do. So, that's another piece of an effective growth engine, which is I don't walk into the office and say, guess what? Today I'm going to try growth. No, you're trained. You're taught how to do it. You have a playbook. There's processes. What stuns me about many organizations in the way that they approach innovation, right, is like you would never hand your supply chain over to a new college graduate and say, here, go figure it out. No, you'd have people with expertise. You'd have engineers. You'd have people who are trained. And yet when it comes to innovation, it's like, oh, here's a glass of water, go innovate. We don't train people. We don't teach them the basics. We don't teach them what they need to know. And then we expect great results. It's crazy.
Yeah.
We would never do that with any other significantly important corporate process.
Yeah. Well, and that leads to a great conversation too, is what is the right training? And if an organization is not willing or able or ready to invest in their teams to understand what innovation is and how to approach it, what can individuals do, or what could they bring to their organization to say, hey, this is something we need to be looking at? Where could we even start with that?
Mm-hmm. Well, I think you can start with your own team. And you can get smarter about how to innovate. So, there's lots and lots of free resources. I mean, if you just go to my YouTube channel, I've got dozens and dozens of videos on just about every topic relative to innovation that you can think of. So you can begin to educate yourself. And there's no reason you can't do innovation at a small scale. So let me give you an example that I just love because it's so counterintuitive. So I had to go get my driver's license renewed. And in most of the world, getting your driver's license renewed is kind of a hassle, right? You have to go to a public authority and you have to bring all your ID with you and you have to, bring all the gold bars your grandparents left you from the old, whatever it is, right? The validation of who you are. And that they're going to be busy. And so you're going to be sitting there for hours. And so I got ready, right? I had a book with me. I had some papers to review. I brought all my ID. I show up and I'm expecting a 3 to 4 hour, experience, an ordeal, probably more like it. So I show up, get to the front, and they check all my IDs and they verify that I've got everything I need to get through the process. And then they look at me and they say, well, do you have a cell phone number? And I said, yes, and give them my cell phone number. They said, okay, well, you don't have to wait here. We'll text you when someone's ready to help you. I said, excuse me? And then I'm looking around the room. And you know what a normal Department of Motor Vehicles is like. There's like kids who've just failed their driving test weeping. There's grumpy old people sitting. Staff are grumpy. The people are grumpy. I mean, it's an unhappy place. It's just not fun. Yeah. And I look around and it's bright. There's nobody sitting around. The staff are like humming and singing and joking to each other. It's a better place for them. And so I look at the guy, I said, really, I can leave? He said, yeah, we'll text you. And then you just come back and we'll be ready to serve you right then and there. Now that we verified you have all the ID that you need. And so I went off and I did some chores, shopping, whatever. And I get a text and it says, oh, this is the DMV. We're ready for you now. Do you need more time? Because if I needed more time, they would then text the next person on the list. Yeah. Now, you know, if you think about it, right, this is a very small thing. This is not like a giant Apple iPhone type innovation, but it's making my life better. It's making the life of everybody in that branch better. It's improving the customer experience. It's creating better workflows. I mean, it's just all kinds of goodness from a very simple thing that I don't know this, but I would bet like some intern thought of this, right? It's like, why are we making people sit around here all day? We could just text them when they're ready. Oh, didn't think of that, right? So how do you unlock those everyday kinds of innovations, which you can do at any level of the organization, right?
Yeah. Well, and I think that's a really good point too. I think innovation can sometimes seem very overwhelming or very daunting, especially if you are, you know, just one of those individual contributor or someone who, you know, you may not feel empowered in your organization to have that type of influence. And that right there, I mean, think about that DMV experience now. You're not going to dread it next time because you're like, okay, this is just another thing I have to do. And it seems small, but it is actually a very large impact. And, you know, I think that that's one of the things that we can take away here, you know, specifically beyond just, you know, the resource conversation, but also just what is innovation and what can we do to start doing it? You know, even the smallest seeming things can have such a large impact to everyone involved.
Absolutely. The other thing I would say is wherever you are in the organization, there's absolutely no reason you couldn't make friends, you know, horizontally, like across silos. Find a topic that's of interest. Maybe it's a book club. Maybe it's a community of practice. Maybe it's you bring in a lecturer. You know, maybe you say, hey, I'd love to hear best practices on customer service from a different division. Like, what do you guys do? There's no reason you couldn't begin to create some of that horizontal communication yourself. And that can put you in a very useful and powerful place.
Yeah, that is a very good point as well. Very good point. All right, so Rita, we are ending the near of our hour here. So if you could take us away with maybe just one or two things, you know, to kind of wrap this up, what would those things be?
Sure. So I think the first observation I would make is that regardless of what your strategy statement says, regardless of what's on the t-shirt, you know, what's in your portfolio is actually what you are doing. And so what you are spending resources on, regardless of the public relations around it, that's going to tell you what's important. It's going to tell you what matters in this company. It's going to tell you who's getting the attention, the ear of senior leadership, what the resources are. And that's also at many levels what your investors are going to be looking for. So what are you spending your money on? What are you spending your time on? What's actually in that portfolio is what you are actually doing, regardless of whatever else. So I think that's the first big observation, which is, do you know what's in there? And do you have a way of keeping on top of it, right? Because that's your reality. That's what's going to determine the future. So that's the first big point. I think second big point is many of the barriers that we experience when we try to do something new, try to break out and do something a little uncertain. Many of the barriers are actually self-imposed, and you can be instrumental in removing those self-imposed barriers. You can actually do that. And I don't think it's magic. I don't think it requires a higher power. There's, you know, in many cases, it's just a question of getting 4 or 5 people together and saying, why do we do it that way? Wouldn't it be better to do it this way, right? And so, you know, you can empower yourself at whatever level of the organization you are to stop doing stupid stuff, right? Which is Sharon Price John's mantra at Build-A-Bear, right? She said, stop doing stupid stuff. For example, when she over. There was a report that got sent to a machine, and a clerk dutifully got that report and shared it around and filed it. And it turns out the report had been requested by somebody who left the company like 5 years ago. And this stuff happens all over. So if you can stop doing stupid stuff, that opens the door to start doing smart stuff. And I think the last thing I would add is that these are very practical issues. Like, this is not something that's intractable and only, God can solve it. I mean, these are things that well-meaning human beings put their heads together and tackle. And so imagine just tackling one bureaucratic barrier a week, right? At the end of 2 weeks, right? You've got a completely transformed organization because you've really thought about, let's get out the stuff that doesn't add value, that is not creating new value, and that makes it a worse place around here to work, right? So imagine coming to work every day and thinking, wow, there's things I could do to make this a better place from wherever I am in the organization. How cool would that be?
Yeah, that would be awesome. I was just talking with my team yesterday. I was like, listen, we spend 8+ hours here each day. Why not enjoy it? Why not enjoy it? You have an issue with something, let's talk about it. So I think that that's personally key as well.
Absolutely.
All right, awesome. Well, thank you so much, Rita. I really appreciate your time this morning. I'm excited to do a few more of these sessions in the new year as well. And thank you everyone for attending. If we did not get to your question today, there will be a follow-up for this. This session will be on Prosymmetry's YouTube as well, probably by the end of the week here. So super excited to have that. If you want to find that, I'm sure we'll send out the link as a follow-up as well. And thank you everyone for your time today. If you are interested in learning more about Rita, about Tempest Resource, please look us up online, ritamcgrath.com, prosymmetry.com for Tempest Resource. There is a wealth of knowledge there, both on the strategy and innovation side, and also on the resource management side with Tempest specifically. So thank you everyone for joining today. Rita, thank you for your time today. It was a pleasure. And I hope everyone has a great day.
Thank you. Enjoy it. Right. Bye, everybody.
Bye.